Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure, all Bookmap Limited materials, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure. Trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Before I go any further, I do need to pause for a public service announcement. Bookmap is asking all Bookmap Discord users to fill out this form. It will provide you with some benefits, webinars, services, beta programs, add-ons, and should make Bookmap Discord a better experience for all users. So please, if you have not already done so, go ahead and fill out this form. It requires your email address, your Discord name, and also your Bookmap license key. If you're not a Bookmap subscriber, you can subscribe to the free version if you're not interested in the in one of the paid versions, and that's available on the Bookmap website. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. And note that Bookmap Discord is a great community. There's a wide variety of channels there on a variety of topics, asset classes, stocks, options, futures, crypto, also in a wide variety of languages. And I'm also on X, formerly known as Twitter. My name there is at Doug Pless. And if you have not already seen me on Twitter or X, and if you're active there, it would be great if you could go take a look at what I've posted, and if you like what you see, give me a like and a follow. That would be great. Thank you. Here are my key tenets for trading. First of all, I believe options trades and market maker hedging activity are key drivers of price in many stocks and futures, and especially the large cap tech stocks that I follow, as well as the equity futures like the S&P 500 and NASDAQ, ES and NQ. And for the S&P 500, SPX is the underlying index. That's the S&P 500. SPY is another version of SPX, and ES is a derivative of SPX and SPY. So when traders buy and sell puts and calls in SPX and SPY, market makers take the other side of that, and they have to hedge their delta exposure with ES futures. So they're hedging delta with delta. And for the NASDAQ 100, NDX is the underlying index. QQQ is the ETF version, and it's actually the most more liquid of the two. And NQ is a derivative of NDX. And the same goes for the NDX and QQQ. When traders are buying, selling, puts and calls in those instruments, market makers are taking the opposite side and they're hedging their delta exposure with NQ futures. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned at the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution. I look at real-time order flow on Bookmap and real-time market maker hedging flow on Spotgamma Hero to confirm my thesis. and for setups, for entries and exits. And when I talk about setups today, I will be focusing on an underlying asset. For example, the S&P 500 setups can be taken with ES futures, SPY shares, SPY options, SPX options, or even ES options. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel and Discord, as well as the chat and YouTube for your questions and comments. Please feel free to post, and I'll do my best to answer your questions. And hello, Stephen. Welcome. Glad you're here. All right, here's my agenda for today, Tuesday, February 13th. First of all, I want to go over news items, economic data, and events for today as well as the rest of the week. Then I'll go through my positional analysis. Then I'll review some setups from earlier today, and then I'll try to move through this as quickly as possible to get to the live market. All right, so let's start with news items, and of course the big news item for today was the CPI data, and let's take a look at that. This is the CPI data for today, and it came in higher than expected and greater than or equal to the previous number. And there was a very bearish reaction to that data. So CPI data worse than expected or higher than expected, and the market did not like that at all, especially a market that has run up so much. All right, for the rest of the week, tomorrow VIX is VIX expiration. And then on Thursday at 8:30 a.m. Eastern Time, retail sales reports, sales are reported. That's economic data release. And then on Friday at 8:30 a.m. Eastern Time, PPI data is released. 10 a.m. Michigan Consumer Sentiment. And of course, Friday is the monthly options expiration for Friday, for February. And that is, we'll take a look at that. Starting tomorrow has been a very call-dominated options expiration. So again, Friday is the February monthly options expiration. All right, let's move on to positional analysis now. We'll take a look at the S&P 500. So this is the ES futures and Bookmap, and just want to point out the reaction to the CPI data right here. Big drop down, about a 40-point or so drop from over 5,000 down to the initial, down to actually more than a 50-point drop down to around 49.50 at the lowest. So over that's in SPX terms. And hello Caesar, welcome, glad you're here. All right, so we'll take a closer look and then just at the ES futures in just a minute. And before I do that, I do want to take a step back, look at a larger time frame. I'm going to take a look at the SPX. This is again the underlying index. I'm going to start with a one-day chart, and the current rally began October 30th last year. So far, from the low to the high, this rally was about approximately 940 points. All right, let's take a look now at a one-hour chart. So we're still looking at SPX. So that is the context, this large 940 point rally. Now let's take a look at the upper portion of that. And what I want to focus on is how the SPX has progressed through these big round number levels, the call walls, starting around 4,800. This was the 4,800, the call wall around the beginning of the year. That's right here. SPX 4,800, and SPX broke above that level. This was on the January monthly options expiration, also a call dominated expiration. Price broke above that level, and then broke above the 4,900 level, above the 5,000 level, and then finding resistance so far around 5,050. So strong rally has progressed through these call wall levels as the call walls have gradually moved higher. All right, let's take a look at the levels on this chart. So first of all, the dashed purple lines are showing the lower and upper weekly expected move. This is based on the options market. It's updated once a week. These levels remain in place on my chart for the entire week. Then the dashed blue lines are showing the lower and upper daily expected move. That's based on the options market also, updated once a day. I update both of these levels every day in Bookmap Discord, and I show them the evening before. So the expected moves for today I posted yesterday evening. And the daily move, that again, that's daily. It does change every day. And note that SPX is trading below the lower daily and weekly expected move today. Big move down after the CPI disappointment. And note the move down did actually start about midday yesterday. All right, the other lines on this chart are Spotgamma levels. These are proprietary Spotgamma levels that are provided to subscribers. They're available on a variety of trading platforms. This is Thinkorswim. I'm going to point out the key daily levels. Excuse me. All right, these are based on gamma-weighted open interest. Again, proprietary to Spotgamma level. First of Spotgamma. First of all, here's the put wall. This is, I'm going through the key daily levels. The put wall at 4,600. That's a strike with the largest net negative gamma that can be expected to act as support. That level did move up from yesterday, from 4,500 yesterday to 4,600. The next level up is the volatility trigger. That's at 49.45. That is Spotgamma's proprietary gamma and volatility flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure, and that tends to enhance or increase volatility. And that is definitely what they have been doing today, and we will take a look at that in just a couple of minutes. So below that level, market makers' position on the gamma curve is negative, and again, they have to trade with price to hedge their delta exposure, enhancing or increasing volatility. On the other hand, above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure, and that tends to decrease or subdue volatility. And Chintan, you're in the Options-Doug chat channel, and that's where you need to post your questions. So you don't want to post your questions in the live stream channel. This is where you need to post, right here in the Options-Doug chat channel. That's what I'm watching. All right, so the next level up is 5,000. And that is the call wall. That's a strike with the largest net positive gamma that can be expected to act as resistance. That's also the absolute gamma strike. That's a strike with the largest absolute positive and negative gamma. Note the call wall did move down from yesterday. So the last couple of days, the call wall has moved up from 5,000 to 5,050 to 5,100, and now today back down to 5,000. And that is bearish. All right, Cali Boy asked if I can zoom in. This is a 1 hour chart, and sorry, I want to show all the levels. So the put wall is way down here. So even if I zoom in, that level will still be shown on the chart. I'll get to a 1 minute chart in just a minute. All right, let me check for questions. All right, Chintan, all right, the volatility trigger did hold up as support so far today, and that is a good observation. And I don't understand your question, how this gets dervised. Sorry, I don't understand. Maybe you could please rephrase your question. All right, so Cali Boy, now let's go to a 1 minute chart so we can get a closer look at the levels in play for today. And then we'll get to Bookmap. All right, so here's a 1 minute chart for SPX. This should be easier to look at. So I'm looking at levels for today. And Chintan asked how the volatility trigger gets calculated. That is a proprietary calculation to Spotgamma. We can take a look at the combo charts and give you an idea of where that level comes from, but the actual calculation is proprietary. All right, so let's look at the levels in play for today. First of all, here's the call wall, 5,000. SPX gap down lower, well below that level. Also, there's the lower daily expected move, lower weekly expected move, right around 49.68. There's also a Spotgamma level right there, acting as resistance. So as Chintan points out, then the volatility trigger at 49.45 acting as support, and this 49.68 and this lower weekly expected move acting as resistance. All right, let's get to Bookmap now. I'm going to zoom in, focus on the regular trading hours. All right, so this is the 9:30 cash open right here. All right, let's take a look at the levels on this chart. All right, still reading questions. All right, so these are the levels on this chart. I have my own cloud notes, so I can show SPX levels. Oops, it looks like I've got a mistake there. So that's the 49.50 level. Not sure what that is above that. That looks like a mistake. I'll check my spreadsheet. Let me zoom just a little bit. All right, so the important level is this 49.45 volatility trigger, as Chintan points out, acting as support this morning, or a target for a short at the 495 SPY level. So I have SPX levels on my chart, and I have SPY levels on my chart. This 495 level being a key level today. And note there is a difference in price between ES and SPX, and today it's right around 16.5 points. That's what I'm using. So I'm showing the SPX 49.50 at ES 49.66.5. All right, Cali Boy asked, should we take calls able to Spotgamma level then? Well, how you trade these Spotgamma levels is up to you. I will talk about how I approach trading with these levels in just a couple of minutes. All right, so those are the key daily levels of the key levels on this chart, both SPX and SPY. I talked about shifts in levels. For the SPX, put wall higher, call wall lower. I put more weight on the call wall, moving lower. Interpret that as bearish. Also for SPY, the volatility trigger, put wall, and call wall all moved higher. So a hat trick for SPY, and that is definitely definitely bearish. Again, volatility trigger, put wall, and call wall all shifted higher. And for the SPX and SPY, both the call wall and call wall shifted higher again for SPX and SPY. All right, let's take a look at NASDAQ, and then we'll wrap up the positional analysis. All right, NASDAQ, NQ futures and Bookmap, equally bearish move after the data release. And the reaction at the cash open was a little bit more bullish in the NASDAQ than the S&P 500. All right, so the underlying index products for the NASDAQ are QQQ and NDX. Before we go further on this chart, let's take a look at charts for, first of all, QQQ, to take a look at the levels in play for today. So the dark shaded portion is the regular trading hours. Support at the open somewhere between 426 and 427. And this is the put wall at 430. So QQQ trading below its put wall, and the zero gamma level at 431 acting as resistance. So for a while the put wall was support, and now QQQ has broken down below that level. All right, so that's QQQ, a 1 minute, 1 day chart. Let's take a look at NDX. We'll see that this 750 level has been key. That's the volatility trigger for NDX. So remember the volatility trigger for SPX acting as support this morning. Here's the volatility trigger for NDX, also acting as support. And now NDX is heading back down toward that level. All right, so just like the S&P 500 ES, I have these levels, QQQ and NDX levels shown on my chart. There's that 750 level that I was talking about. There's the QQQ 431 level, zero gamma acting as resistance. I also have key NQ levels on this chart. The big round numbers, those are shown in red, the zeros in the 50s. And here's the lower daily and weekly expected move. All right, remember, I'm still on positional analysis, looking at the levels and how ES and NQ have reacted to those levels and the levels in play for today. All right, shifts in levels. For the NDX, the volatility trigger did shift higher, and for QQQ, the put wall shifted higher, and the absolute gamma strike shifted lower. So kind of a mixed picture for the NASDAQ. And Cali Boy asked, are the indicators and toss for traders to buy in Bookmap store? So these lines that I'm showing in Thinkorswim, these are available to Spotgamma subscribers. So they really don't have anything to do with Bookmap. And if you do use Bookmap, the Spotgamma levels are available in Cloud Notes for Bookmap as well. I use my own, so I can be more precise and show the SPY and SPX all in one column of notes. All right, so this is available to Spotgamma subscribers. It's not in the Bookmap store. All right, let's go back to the S&P 500. Let me check for questions. And the Tremendous Tim asks, why is the put wall so low and the call wall always so close to mark? So remember the definitions of the put wall and call wall, and it just they're calculated and shown every day. So the put wall is the strike with the largest net negative gamma, and the call wall is the strike with the largest net positive gamma. All right, so let's wrap up the positional analysis, and then we'll take a look at some things to answer these questions. All right, so I'm going to go back to, first of all, take a look at gamma notional for the beginning of the day. So this is market maker's position on the gamma curve at the beginning of the day for the S&P 500, NASDAQ, and Russell 2000. Note all these numbers are positive, indicating at the beginning of the day, market maker's position on the gamma curve was positive. So what Spotgamma assumes for an index is that traders are short calls, market makers are long calls, hence the positive gamma environment. They have to trade against price to hedge their delta exposure. All right, the next thing that I want to take a look at is the Vanna model to get a graphical representation of what that means. All right, what this chart is showing is delta notional. All right, so for those of you who have seen the recent discussion in Bookmap Discord in the Options-Jug chat channel, please note that this is delta notional. All right, so that's on the vertical axis. This is spot price for SPX. On the horizontal axis, there are two curves on this chart. The first shows how delta notional may change with changes in price only, and the purple curve adds implied volatility to the equation. That shows how market makers delta notional may change with changes in price and implied volatility. And that change in delta with a change in implied volatility is the Vanna effect. Vanna is a second order Greek. All right, so let's take a look at prices now. So we know the low of the day for SPX was right around 49.45, and that's the volatility trigger. So that is firmly on this left skewed portion of the curve. So what this is showing is price was falling today, implied volatility increasing, market makers delta notional was increasing. Remember, they want to remain delta neutral, so they had to sell futures to hedge their delta exposure. And then as price rallied off that 49.45 level, price was increasing, implied volatility dropping, and market makers could buy back their short futures. And that is a put Vanna rally, and that was what was helping to fuel that move higher off the 49.45 strike this morning. All right, we'll take a quick look at SPY and QQQ, then we'll move on. All right, so the low of the day for SPY, the last time I looked, was right around 493. Also on this left skewed portion of the curve, indicating traders are trading with price to hedge their delta exposure. Price is falling, implied volatility increasing, market makers delta notional was increasing. They had to sell futures to hedge their delta exposure. And finally, the same for QQQ. Low of the day right around 426, somewhere between 426 and 427. So very much high up on this left portion of the curve. All right, let's go back to SPX. And I'm going to take a look at absolute gamma. So Tim, this will answer your question. It looks like he might have left. Anyway, let's take a look at the, all right, so the call wall, we know that's at 5,000. That's the strike with the largest net positive gamma. So that what this chart is showing is absolute gamma. Orange bars are showing call gamma or positive gamma. Blue bars showing negative gamma or put gamma. So the call wall is simply a calculation. It is the orange bar minus the absolute value of the blue bar and looking for the greatest value. And that's the greatest value is right there at 5,000. Note that's also the absolute gamma strike, and that strike can be expected to act as a magnet for price, especially in still a positive gamma environment. All right, the put wall at 4,600. Well, it's not even shown on the chart. I may have to. See if I can find it. All right, so there's the put wall. So Tim, if you're watching this recording, there's the put wall. Again, it's a calculation. So it's the blue bar minus the orange bar. All right, so finally, let's take a look at the volatility trigger. This is the combo strikes. So this is showing combined gamma for SPX and SPY. This is the zero line. And negative gamma or put gamma below the zero line, call gamma or positive gamma above. Let's take a look at where this shift occurs. All right, so there's 49.47. All right, so note there is some put gamma above that level, but no call gamma below that level. So that's where the shift occurs to purely put gamma. All right, so Chin Tan, this gives you a visual representation of about where that volatility trigger is located. All right, so based on this today, my thesis for the day was bearish based on the shifts in levels, and of course you never know until the market reacts to the CPI data. All right, so let's take a look at some setups. And Juan the Man asked, how does the Vanna model influence your trading, if at all? It gives me a sense of how market makers may be reacting to changes in price and applied volatility. And I know on that left skewed portion of the curve that market makers are going to be trading with price. That leads me to expect a wider trending range, more trending days, and more volatility. So I can set my profit targets higher. Look for more profit, again, wider trading range in my setups for the day, as opposed to a very positive gamma environment that would be on the right portion of that curve moving up. I would look for taking profits at much lower from my entry. All right, so I'm looking for again higher volatility today, a wider trading range, as SPX and the SPY and QQQ have all moved to the left portion of that Vanna model. All right, so I'm going to start now with real time looking at setups. All right, so everything that we've looked at so far is based, other than Bookmap, is based on static data. Everything that we've looked at so far is based on static data. The gamma levels and the Vanna model. Spotgamma takes open interest data from the OCC that comes out once during the night. They apply their algorithms to that data and come up with all the information that I use in my planning and positional analysis. All right, so now we're moving on to execution, looking at, first of all, how options traders have been reacting today. All right, so what this chart is showing, let me just zoom out briefly. This is the hero signal, hedging impact real-time options. This chart is showing price for SPX and the hero signal in purple, again, hedging impact real-time options. So this is showing options trades and market maker hedging activity for a combined signal of the SPX, SPY, XSP, and ES futures, all into one combined signal. So if you trade any form of the S&P 500, this is the signal that you want to take a look at. And a falling hero signal indicates traders are taking negative delta positions. They are selling calls and or buying puts. Market makers take the opposite side of that. So they have to hedge their delta exposure. They want to remain delta neutral. Their job is to make markets and manage their risk. And the risk is in delta exposure. And for the S&P 500, the way they do that is with ES futures. And for SPX, that's the only way that they can hedge. There is no SPX. You can't buy or sell the SPX. So they buy and sell futures to hedge their delta exposure. And a rising hero line indicates traders are taking positive delta positions. They're buying calls and or selling puts. And we'll see what they were doing earlier today. All right, let's zoom back in on this chart. So we know it's a combined signal. Zoom back in. I'm going to take a look at a couple setups. Now I mainly trade in the morning up until from say 9:45 to noon. All right, so looking at setups this morning, and the first was this short setup. Traders started taking negative delta positions right around 9:40. Price reversed lower at the SPY 495 level. And then right around 10:20, the call buyers were not to be denied. So the dip buyers came in right around 10:20, right at that 49.45. That's shown as the hedge wall here. It's the volatility trigger for an index. Call buyers come in. So let's separate out puts and calls and see exactly what traders are doing. Close this. Take a look at puts and calls. So what that's showing, the orange line is showing calls. A rising orange line indicates traders are buying calls. When traders buy calls, market makers sell the calls. They have to buy ES futures to hedge their delta exposure. And a falling purple line, which is what was driving price this morning, sorry about that, indicates traders are buying puts. Market makers are selling puts, and they have to sell futures to hedge their delta exposure. So that was what was driving this move lower this morning. Traders buying S&P 500 SPX SPY puts. Market makers take the opposite side, and so they were selling puts and selling futures to hedge their delta exposure. That turned around 10:15, 10:20. They started selling puts. They started buying calls. Note the orange line, blue line moving in the same direction. That's a very bullish signal in this case. Setting up along from that, again, that 49.45 level. All right, let's go take a look at Bookmap. Going to zoom in. Actually, let me zoom in a little bit more. So let's look at the short first. All right, so remember, traders were taking negative delta positions, primarily buying puts. After a brief move up at the cash open, then right around 938, the volume dots show market buy minus sell. Green volume dots indicate more buyers than sellers, and the magenta dots indicate more sellers than buyers. And aggressive sellers start to come in right around the 495 level. That's the SPY 495, as traders were buying puts, SPX SPY puts, and the S&P 500 moved lower down to the 49.45 level. And note the lines in the subchart. First of all, the pink line showing cumulative volume delta, and then also the falling yellow line showing sell stop orders fueling the move lower. That's also shown by these yellow dots, green dots. And there were a couple of entry points if you missed the initial entry at 495, which is very obvious to me. Let me just scroll over. So I drew this horizontal line in right here. Wrong tool. I drew this horizontal line in. Notice that it acted as resistance before. So that was a secondary entry, then another entry right around the 49.55 zero gamma level. That's point of control just above that. And down to the 49.45 level. All right, let's take a look at the long. So we know right around 10.15, 10.20, traders started taking positive delta positions. They were selling puts and buying calls. The dip buyers came in. So let's look at the clues in Bookmap. Actually, first we'll see what large traders were doing with iceberg orders. That's shown by the light blue line in the subchart. This is pretty typical of large traders with iceberg orders. They were buying weakness. So as price is falling, large traders buying ES with iceberg orders. That's shown by the subchart indicator there, as well as the on-chart indicators. These are not large, but large traders were buying that move down with iceberg orders. Then around 10.15, 10.20, aggressive buyers came in. That's shown by the green volume dots. And price started to move higher, back up to 495. And continued all the way up to this lower weekly expected move just above that. And then there is an SPX level just at the same level at it's at 49.68. That's SPX 49.68. That's also VWAP there. Price consolidates, then breaks that trend and moves lower. All right, so let's go back to Hero. So here's the setup for the long again. Traders taking positive delta positions, selling puts, then a few minutes later, a couple of minutes later, they start buying calls. All right, let's zoom out now. And this is a very typical pattern. Let's go back to the total signal now. Actually, while we're here, let's just take a look at notional value. So puts definitely driving price today. That's in opposition to yesterday where calls were driving. Traders net for the day buying puts. That's shown by the negative notional value minus 3.7 billion. Net for the day, they have also been buying calls, and they are not doing too well with those calls they've been buying. All right, so let's go back to the total signal. And this is a very typical pattern. Traders taking positive delta positions. They take their foot off the gas, in this case right around 1145, 1150, and price moves lower. And that move lower continues as the hero signal continues to make lower highs. All right, so let's zoom out, take a look at that. And notice 1145, 1150, trend break. A lot of aggressive sellers come in, and price moves lower. CVD shifts negative, and then sell stop orders fuel the move lower. That's shown by the yellow line. Also the on-chart indicators. Large traders are buying this with iceberg orders, but they don't have enough size to move the market. All right, so this is the entire session for the S&P 500 making new lows. This is starting yesterday at 6 p.m. Eastern. All right, let's take a look at NASDAQ. Remember, NASDAQ was a little bit more bullish in the morning. So here's the cash open 9:30. Let's go see what options traders were doing. And for NASDAQ, I like to take a look at this MAG 7 signal. And I'm not going to zoom out and show. This is, for those of you who have seen this before, this is a combined signal showing options trades and market maker hedging activity for a combined signal for the stocks known as the Magnificent Seven. Apple, Amazon, Google, Meta, Microsoft, Nvidia, Tesla. So in the morning, and this is brief, right around 10:18, traders started taking positive delta positions, and that set up a long, did not last long. They shifted, started taking negative delta positions, and NASDAQ started to move lower. And we'll take a look, see what they were doing, puts and calls. So what they were doing, right around 10:18, they started buying calls. That's shown by the rising orange line. When traders buy calls in a stock, market makers sell the calls, and they have to buy stock to hedge their delta exposure. And these 7 stocks, of course, make up a very large component of the NASDAQ 100 and the S&P 500 as well. Then after that, it's been a short. All right, so let's go back to Bookmap. We'll zoom in on this. So here's the long in the morning, just after 10:15, at the 570 level that I've mentioned before. I think I might have been calling that 750. That's actually 570. Sorry about that. So it's the 570 level, the volatility trigger for NDX. Note the aggressive buyers coming in. Green volume dots, magenta volume dots on the way down. CVD starts to rise. Buy stop orders fuel the move higher. There were some large traders in before that move, buying with iceberg orders, shown by the rising light blue line. Price moves up to the 431. Zero gamma level as traders were buying Mag 7 calls. All right, let's take a quick look at some stocks. Then we'll get to the live market. And this is pretty typical. The move starts before the move down starts before my webinar, just like yesterday, and then continues during my webinar. Apple was bullish in the morning. Let's go take a quick look at Hero. Go to Apple. So in the morning, traders were buying. Let's just go to the total signal. This is kind of noisy. So in the morning, traders were buying calls and selling puts. Price moves up. All right, the next is AMD. Traders taking advantage of the weakness in AMD to sell puts, shown by the rising blue line. Note the put wall at 165. Let's go to Bookmap. AMD. AMD finds support around the 165 put wall. Traders are selling puts. Price moves higher. They take their foot off the gas. Price consolidates. Let's go to Netflix. So in Netflix, traders were selling puts and buying calls. Let's go back to the total signal. Price moves higher. Up toward the key gamma strike at 560. Let's go take a look at Bookmap. Netflix. All right, so bullish morning in Netflix. All right, so Caesar asks, should the same thing happen at the lows and we get another put Vanna rally? It's possible. Just because price moves down does not mean a put Vanna rally is in the cards. Think of the put Vanna as a potential fuel for a rally. So put Vanna is potential fuel. If price starts to move higher, implied volatility drops. All right, David wants to look at Nvidia. We can do that. All right, dip buyers definitely in Nvidia this morning. Let's see what options traders were doing. Go to Nvidia. So this not real strong in the morning. Nvidia did increase. Looks like quite a bit of most likely aggressive buyers. Put wall at 705. Options traders, whatever they're doing, slightly bullish, taking their foot off the gas. And price consolidating and moving slightly lower. Hero falls, price consolidates. Not a lot of clarity here in Nvidia today as far as Hero goes. Let's go back to Bookmap. So it looks like more just aggressive buyers moving Nvidia higher today, shown by all the green volume dots. And also David wants to take a look at SMCI. I don't have that in a Bookmap. We can take a look in Hero. That's been a very bullish stock. $800 is the call wall. And starting right around 10, somewhere between 10 and 10:15 today, traders started buying calls. Price started moving higher. Take the foot off the gas just below the call wall, and price consolidates. And let's take a look. One other thing I want to take a look at is the VIX chart. So remember this morning for the S&P 500, $10.18 was about the entry point for long. This is 10.15. At that point of the day, that was the high of the day for VIX. So the S&P 500 finds support at 49.45, volatility trigger. VIX started dropping, price increasing. That's the put Vanna rally. Market makers can buy back their short futures. As price increases, implied volatility drops, they can buy back their short futures. And then starting right around $11.50, VIX starts increasing again. Let's go take a look at ES. 11.50. At that same time, traders start buying puts. Price moves lower. Traders buying puts, market makers sell the puts, and they have to sell futures to hedge their delta exposure on that portion of the the Vanna model. All right, so Caesar, I hope that makes sense. This just gives me an idea of how market makers may be reacting, whether they're trading with price or against price, as price and volatility change. And I'm using VIX as a proxy for implied volatility. All right, let's go back to Bookmap. Go to ES. Maybe finding support at 492. And that is also the ES 4950 level. That's right. Caesar says it's a secondary event, not a primary event. VIX has to drop, then a rally is fueled by the put vanna, not the main event. So yeah, that's right. The vanna model is secondary. It just gives you an idea that there is fuel in the tank for a rally, or also if price continues lower, market makers will need to continue to trade with price. So as price dropping lower, they will need to continue to sell futures. So now SPX is below the 49.45 volatility trigger. Let's go back and check Hero. Go back to the total signal. So this was a pretty steady drop in the Hero signal from 1150 up until about 215. Sorry about that. This auto zoom. I think the changing from total signal to puts and calls kind of triggers this auto zoom. So now it looks like traders may be buying the dip again. Hero may be shifting up. Let's go take a look at Bookmap. Note that large traders have been buying the move lower with iceberg orders. That's shown by the rising light blue line. And right now they're doing this in some size. This is a pretty significant size. That's 4,430 contracts. And this zoom level, Bookmap, will aggregate those. So that's showing 4,430 contracts, 20 executions, 1,500 contracts, 2,195 contracts, 2,135 contracts, and 3,030 contracts. So a lot of large traders buying this move down with iceberg orders. All right, are there any more questions? My time is up. Let me know if you have any more questions. Otherwise, I'll wrap it up. And one last thing I want to ask. I've had several requests recently for a primer video, something about background of how I'm using Bookmap and Spotgamma. If that's something you're interested in, please let me know. You can leave your comments in the Options-Doug chat channel, or also you can contact me by direct message in Discord. Again, my name is Doug P. If you are interested in some sort of primer video, that is on my to-do list. Not quite sure how I'll do that, but please let me know if you're interested in what you're interested in, what you want to see. All right, everyone, thank you very much for watching. Thank you for all your questions and comments. I love these interactive sessions. Love to answer your questions, and I will see you tomorrow. Have a great afternoon. Thanks again. Bye.